Cool. All right. Well, good morning, everybody. I'm sure that more people will be joining in, and this is also being recorded. So, for anyone who is maybe watching this on the replay, welcome and thank you for joining us. So, we have Alita here, and she is with State Farm Insurance Training. Alita and I initially connected when George had reached out to us in a mutual email. And so, I'm thinking, did you maybe work with George on a past transaction?
Yeah.
Awesome. Cool. So, and she's with State Farm. She's going to be teaching us about insurance. I know whenever I bought my house, I got insurance because I had to, but I honestly didn't deep dive, and that's not something my agent went over with me. And so I think that going over insurance options and walking your buyers through that, or knowing where to guide them in that process, is really important. So, Alita, thank you for being here, and the floor is yours.
Thank you so much for having me. I really appreciate that. So as Ashley mentioned, my name is Alita Amanero, and I own a State Farm insurance agency here locally, like literally down the street from you guys in Carlsbad in Bressy Ranch. And so my goal here today is not necessarily to make you guys insurance experts, but to make you look really good in front of both your buyers and sellers. And then I know there's a lot going on right now with wildfire risk. So to answer any questions that you guys might have, I did prepare PowerPoint. So I'm going to go ahead and share my screen, and someone can just drop in the chat and let me know if you can see my screen. And I actually, now that I'm saying that, I can't even see the chat. Okay, great. Thank you so much. Okay, good. So a couple of the things that I really wanted to start off with going over with you guys is the biggest myth in all of real estate history, which is insurance cost, eligibility, sorry, my slides are freaking out, claims, going over wildfire risk, and then basically what's in it for you in working with an insurance agent. So I can no longer see the Zoom screen. So Ashley, please stop me if somebody has a question or somebody dropped something in the chat. Feel free to just take yourself off of mute and let me know, okay?
Gotcha. I'll help you keep an eye on it as well.
Thank you so much. Okay, so the biggest myth in all of realtor land is that if there is a claim on the property that your owner is selling or that your buyer is buying, that there is an issue with the insurance because there is a claim on that property. That is not true whatsoever. The truth is that the claim follows the owner and not the property itself. Your buyer will never get dinged, charged, denied for a claim that happened from something that was reported by the old owner, regardless of the property. So is that kind of a shocker to anybody? Has anybody heard that myth, believed that myth? Can you guys tell me a little bit?
I just kind of assumed, since it's homeowner's insurance, that it would stay with the property. I didn't realize it stayed with the person who filed the claim. That's helpful, actually.
Yeah, so it's very much like auto insurance. If you get into a car accident and you sell that car, that new buyer doesn't take on the claim from your auto accident, right? So it's the same exact thing. The new buyer does not take on any responsibility, surcharge, eligibility issues whatsoever from the claim of that owner. So hopefully you guys find that useful. The buyer, again, will not be penalized. Eligibility doesn't depend on any prior claims to that property. So you guys are probably thinking now, okay, well, what the heck does the eligibility and the cost actually depend on, right? A lot of times we assume that it is the location. So we are in Carlsbad. You guys probably do a lot of deals in Carlsbad. Carlsbad is a very affluent market, and you probably automatically think, okay, well, the insurance is going to be more expensive because they're buying in Carlsbad. Nope. The only thing that we care about under homeowners insurance is what is the cost to rebuild that home. So whether that home is in Carlsbad or Encinitas or Vista or San Marcos or Oceanside or any of these neighboring communities, when you go to Home Depot or you hire a contractor, they all work in the same vicinity. The cost is the same. But why do you pay more for the Carlsbad house? Well, you have better school districts, you might have a view. Just ultimately the land costs more, but it does not, that does not impact the insurance premiums whatsoever. So what does it impact? How big is the house, right? So the cost for us to rebuild, the bigger the house, the more it's going to cost for us to rebuild it. Therefore, the more that the insurance is going to cost. What is the quality of the interior of the home? If we are rebuilding that property and it is standard countertops, standard carpet flooring from the 80s or the 90s, well, that's going to cost a lot less than somebody that just remodeled their home and now we're having to rebuild it at higher quality material, more customizations, etc. And then of course, in addition to that is if that new buyer has had any claims in the last 5 years. Doesn't matter if they're a first-time owner, if they've had a claim as a renter, that will follow them along for 5 years. Only on primary residence. If they had a claim on a rental property that they owned, that does not affect them. So do you guys have any questions about that?
Yeah, so when, say for example, like we bought a house, right? And it's probably like a fixer upper or just needs like some upgrades and we get home insurance on that particular house and then we do upgrades. Is there like a way, like, I guess, to get like an upgrade on the homeowner's insurance or anything like that, that way can cover, I guess, what was done in like the remodel or anything like that?
Absolutely. So there's a couple different types of insurance policies. In that specific case, a buyer's just coming in, buying a fixer-upper, and they're looking to do some remodeling and upgrades. Once the upgrades are completed, they reach out to their insurance agent and they increase the coverage based off of the quality of the home. The size typically doesn't change unless they're adding square footage to the property, but the coverage would still change based off the quality. And that adjustment gets made once the remodel has been completed. There's another type of insurance. I'm not sure if you guys are familiar with builder's risk. So that is for somebody that's just going in and building a brand new property. And that is specifically based off of what we believe the quality size would be upon completion of the home. So this doesn't apply to communities, new development communities, because the developer will carry that insurance policy, but this will apply to people that have just bought a single piece of land, not in a development that's in phases, just on their own, and they're building it on their own. Then they do need insurance, and that's going to protect them from any damages that have happened to the home while it's being built. It's going to protect them from any liabilities of the contractors being hurt on their property because they still own the land, whether the house has been built or not. So to answer your question, yes, but typically that would happen once the remodeling has been completed.
Okay, great. Thank you.
Does that help? Yeah. So the last piece that you guys are super familiar with, and I'm not going to harp on it too much unless you guys have questions, is wildfire risk. Eligibility and insurance costs depends on wildfire risk. That is a scale of 1 to 12. After 12, you get bumped into the California Fair Plan, which we all hate and despise. We do not say the C word in my office because it's just awful. It is the worst insurance possible that any buyer or owner can have. And so how do we determine if it is in wildfire risk? It has nothing to do with the county boundaries. It has nothing to do with wildfire hardening borders. It has nothing to do with anything that the state says. Insurance companies make up their own boundaries and their own borders that is regulated by the Department of Insurance. Every insurance company has different guidelines and different borders. So just because it's ineligible with one company for wildfire risk doesn't mean it's ineligible with the next company. So what I'm going to do is I am going to exit out of this really quickly here, and I am going to show you how easy it is to figure out whether or not a property is eligible based off of wildfire risk, or what you guys are going to be up against in negotiations and in escrow. So can anyone throw out an address to me that maybe they had an issue with for wildfire risk, or is in a, maybe assumes to be in a wildfire zone?
I have one.
you.
Okay, yeah, let's go. Well, I'll do a couple.
Okay. Do you want me to go first?
Yeah. Can you guys see my screen still?
Yes, I can.
Is it showing the peril-based information tool?
It's just showing the
No.
PowerPoint.
No, it
No,
has
okay, okay, now can you guys see it?
Oh, yeah.
Yes,
Yeah.
there it is.
Okay, so this is my tool. It takes me less than 30 seconds to tell you if the address is eligible or if we're gonna have to go through California Fair Plan. So what's the address?
Okay, it's 69925 Juniper,
City,
Mountain Center.
and do you have the zip code?
Give me 1 second, I can grab it. Yes.
It's 92561.
Thank you. I was like,
Yeah,
oh my, why is my home snap not showing?
Okay, so what does this mean? So risk is a home in a homeowner's non-tenant gross sustainability program area. It is not wildfire risk. It is not a high wildfire risk. All it means is that we are limiting our growth in those areas. So we're only going to write a certain amount of policies in those areas. It might be slightly more expensive, but it's still eligible to be written. Does anyone have another? I just want to see if one comes up where it says high wildfire risk. Like it is blatantly alert, flashing lights, high wildfire risk, will not touch it. Does anyone else have one?
15213
Oh my God. What? I saw him turn
Molly
off.
Ann Court.
Sorry, I missed that.
Molly Ann Court,
One word.
2 words.
Okay. And city and zip.
And the Ann has an E at the end. It's Valley Center. And it is 92082.
Okay, so Valley Center might be high wildfire. Okay, here we go. Risk is in a high or very high wildfire area. Risk is ineligible. So my system blatantly tells me like, nope, it's not happening. As a realtor, it is super important for you guys to figure out, is this property eligible, ineligible within, can you guys still see my screen? I don't know if it's the PowerPoint or the.
Yeah, PowerPoint. Now it's on the PowerPoint.
Okay. So, So it is super important for you guys to find that out immediately. You guys saw on my system, it takes me less than 1 minute to determine that. If your seller is interested, like obviously putting it up on the market, as the representing agent, you want to know what you're going to be up against when the buyer comes back for negotiations. On the back end, as the buyer's agent, you want to know, are these premium costs going to impact their debt to income ratio? Is it going to be so substantial that it may be a deal breaker for my buyers? Do they have a certain budget? And you can use this as a negotiating tool in your escrow with the sellers and or with the buyers. If you already have that information up front and you're releasing it, now there's no back and forth and threats and this and that of canceling escrow. You already know exactly how you can handle this. It used to be in my world, and as you guys know, the insurance agent was the last person to find out about an escrow. Like 2 days before closing, the lender, the realtor, the escrow officer calls us and is like, hey, we need insurance in 5 minutes because we're trying to get this closed and we need approval on the insurance policy. That doesn't happen anymore. If your insurance agent is the last person you're calling, you're behind. Your escrow will be delayed. The insurance agent should be like second to you getting your inspection completed before your appraisal is even getting done, because it takes a really long time now for us to make sure that we can have a proper policy in place for you guys if it is high wildfire risk. More importantly, I'm not sure if you guys know this, but in addition to what the mortgage payment is, in addition to property taxes, the payment of the insurance policy affects the buyer's debt to income ratio. It is a huge factor in the debt to income ratio because they are required to maintain it. So if you have a buyer that's on the cusp of being approved for the loan and the insurance payment is outrageous, what's that going to do? It's going to disqualify them from the loan, or they're going to have to negotiate with the seller to bring down the cost of the purchase price of the home. So does that make sense why it's super important? You guys can literally shoot a text, send an email. Hey, I have this address. Can you check it for me? And it's very efficient to just let you know, hey, you're in good shape, or hey, you might be running into some trouble. Is that helpful?
Yes.
Super helpful.
Okay.
That's really cool. Thank you.
Yeah.
I have one quick question. When you said that the California Fair Plan is awful, you hate it, you don't want to use it, is it just because it's expensive, or
No.
what is why does it have such a bad reputation?
Sure. Yes. So it is the best way that I can explain this. It is the same quality that you get as if in health insurance world, somebody's on Medi-Cal. It is very poor quality insurance. Why? It is a state-funded policy. So when a buyer or whoever, an owner, is filing a claim, they're going through the state. They're not going through a private insurance company. It's like trying to get something done with the IRS or the DMV or any other government entity. It takes forever and it's almost impossible to get done. The second thing is it only covers fire risk. That's it. That's the only thing it covers. Liability claims, water losses, dog bites, anything else you can think of in a home claim, the only thing it covers is wildfire risk. So your owners have to get a supplemental policy. It is required that they get a second insurance policy to fill the gaps of what California Fair Plan does not cover for those traditional claims. Like most of our claims, the number one claim that we encounter is not wildfire risk. We don't just have fires coming in through our communities, especially Carlsbad, Encinitas, like North County Coastal. We don't really experience that. So our number one claim is water loss. The plumbing in most of these homes is very old, and we often have leaks, kitchen issues, bathroom issues. That's not covered by California Fair Plan. The only thing that's covered is wildfire risk. So that supplemental policy is basically the same price as a normal homeowner's insurance policy. So now you're paying for two homeowners insurance policies and essentially doubling your premium for a lot less coverage or very ineffective coverage than what you would have through a private insurance company. And in my eyes, the best way that I can explain it is it's the same quality that you're going to get and the same efficiency that you're going to get as if you had Medi-Cal for your health insurance.
And that is, just so I understand correctly, if it isn't a high risk fire, that is the only fire insurance option.
That is the only option. It's a state funded policy, just like flood insurance. The only way you can get flood insurance is through FEMA. The only way that you can get wildfire, if the private companies deny you, the only way you can get it is through California Fair Plan. It's the only option.
Got it. Okay. Okay. Thank you.
Yeah. So on to basically what's in this for you guys. It is really important that as a realtor, you have your experience, your knowledge, your efficiency, that people work with you for a reason. There are so many realtors out there, just like there's so many insurance agents, escrow officers, home inspectors, lenders. So why are they working with you specifically? It's because you're going to make sure that their deal gets closed and it's going to get done to the best interest of either your seller or buyer. So my role in this is I handle on the back end getting the deal closed for you. My agency specifically aligned with real estate professionals. I work your hours, I speak your language. I'm a real estate investor myself. I'm a homeowner myself. Like I'm in this world. It's always kind of off to me when an insurance agent doesn't own their own home or hasn't been through this process in order to really align and relate with realtors, sellers, and buyers. So what's the most important thing, right? Like most people still think that the insurance agent is the last person that they're going to call in this line of processing. So if that does happen, I have authority to bind coverage day of, and we get the evidence of insurance and the invoice to the lender and the escrow team within 15 minutes or less. I'm not sending it to your buyer. I'm not sending it to whoever. I'm sending it directly to them to make sure that it gets done, approved, and closed on that day. The premiums are another issue, as we discussed, because of wildfire risk, claims, etc. So the premiums heavily reflect in debt to income ratio. And if somebody's on the cusp, we have the ability to adjust that premium in order to make sure that they are still qualifying for their loan. That's huge, you guys. I've saved multiple deals because the buyer was on the cusp and the entire deal was going to break through, because literally the stupid insurance was the one that was going to break the deal. Of all things, it was going to be the insurance. So most importantly, when you are giving out a referral, it is a reflection of you, and you want to make sure that you are represented well, that you look good, that people are coming back and saying, thank you, Amy, thank you, Ashley, thank you, Melissa, thank you so much for sending this person, because they really helped me and they made it easy. And so that's my goal for you guys. So that's basically all I have for you. Did you guys have any additional questions?
No, but we really enjoyed your presentation. So thank you so much for speaking today.
My pleasure. I hope you guys were able to see the right screen. Are my screens changing or no?
Yes, they were.
Good. Okay, great. Thank you. My pleasure. Yeah, anything I can do to help. Here's my contact info. I think the biggest takeaway, if possible, is that I don't want you guys to feel afraid if there's been a prior claim on the home. I also have access to see if you feel like maybe the seller wasn't fully disclosing to your buyer all the issues that have happened to the home. I can see all of the claims that have ever happened on that property, even prior to the seller or prior to the seller, ever since the home has been built. I can see all those claims, and I'm happy to share them with you guys. And if you are afraid that that home is in wildfire risk, you guys saw my tool. It literally takes 30 seconds to tell you if you're going to run into an issue or not. So any way that I can help, here's my contact info, and I really look forward to working with you guys.
Yeah, thank you. I'm going to add this to the roster.
Thank you.
Yeah, my pleasure. Any other questions?
Nope, that was great. Thanks so much.
Thank
Yeah,
you.
thank you. Thank you very
My
much.
pleasure.
Thank you.
I hope you guys have a wonderful day. And if you need anything, please, again, don't hesitate to reach out.
Thank you.
Definitely.
Bye, everyone.
Thank you, Ashley, for hosting this. I really appreciate it.
Yeah, thank you for coming on. I'll follow up with you via email.
Okay, sounds good. Thank you.
Bye.
Bye.